Now, the Australian Tax Office is targeting some of the world's biggest companies, including Google, as part of a $1.5 billion tax hunt. Today's finance guru, I just mentioned him, Ross Greenwood, is here. Now, Ross, what's the ATO?
Come on, Timmy, pucker up, big fella.
Oh, please.
Listen, I want to explain this to you because what's happened is the tax office, as we know, the whole of the world basically has not got enough tax revenue coming in. And so governments around the world, the biggest countries, are crying out for additional tax revenue. But what's happened is that many of the biggest multinationals in the world have worked out that they can basically get around the international tax systems. They can use things that are called, double Irish Dutch sandwiches to effectively tax scheme so they can move money into Ireland and move it out into the Netherlands. They've been doing this for quite some time. So here are the targets that are the key ones. Google, Apple, Amazon, IKEA amongst the ones that the tax office right now is looking at here in Australia to figure out whether they have been using these artificial schemes to get money out of Australia that should have been taxed right here. Now, I'll give you a couple of really good examples of this. If we look forward, what we can see is, say, for example, in the case of IKEA, the suggestion is that in the past 10 years, they've had $1 billion profit that's been made here in Australia, but they have only paid $30 million tax here. So we're talking pretty much 0.3% in tax as compared with the company tax rate sitting there, or in fact 3% tax as compared with the company tax rate of 30%. So the whole point about this is if you're able to somehow shift the profits that you've made here in Australia out to places in the Netherlands or places where tax rates are much, much lower, Luxembourg is another place, then quite clearly you've got a situation. Here's Apple. Apple in Australia has said that we've shifted over the past 10 years some $8.9 billion out of the country to low tax environments. And of course this means that the Australian taxpayer is not getting the benefit of this money. And that's the reason why, after a Google tax was introduced by the UK, or they announced it last week, it'll be introduced next year, 25%, why Australia is also looking for this money as well.
People sitting at home, I'm going to ask you the bleeding obvious question.
Yep.
What about companies here in Australia? You're talking about multinationals owned elsewhere. What's to stop companies here doing exactly the same thing?
Nothing. Absolutely zero. Because this is all being orchestrated by some of the biggest accounting firms, all the household names that you know. And there have been documents released. And Chris Jordan, who's the tax commissioner, who's organising all of this, he says one of his greatest fears is that more Australian companies will do exactly this to try and maintain their competitiveness. And there's evidence that some of them have already started. But there is one problem about this, is that while these companies here are shifting money around the world to take advantage of low tax environments, what about Australian companies, big mining companies in particular, that earn money in, say, Mongolia or Chile or other parts of the world? Now, they bring that money back home here in Australia, where it is taxed here at higher tax rates. Should they technically be paying the taxes in those countries where they generate the profits? So you've got to understand that this is a very complex web, and as we try and answer one question, we might actually get an answer we don't like on the other side of the equation as well. But it is certainly something that world governments right now are trying to crack down on.
Thank you, Roscoe.
Quite okay.